announcing the coming of the Messiah on your call to repentance.
Jesus did say by himself that he will come back to take his saints.
When we talk about the coming of Jesus today, that day will also be a day of a mighty deliverance and also a day of a mighty judgment.
Tune in weekly every Sunday at 7 a.m. on TVC News for a divine message on righteousness, holiness, and godly living.
Say, my actions, my lifestyle has consequences.
Don't miss your call to repentance as we prepare the bride for her king.
This week, where we'll take a look at key activities and major business stories in the week. I am Frank Omalape. Has what coming up in a moment? The Central Bank of Nigeria raises benchmark interest rate by 50 basis points to 26.75%. amid soaring inflation and skyrocketing food prices. And the National Bureau of Statistics says prices of food items witnessed significant price increases, rising by 14.11% in the month of June. Outside Nigeria, Britain's Vodafone has sold a further 10% stake in Vantage Towers for 1.3 billion euros, bringing its ownership down to its intended level. This and many more other stories coming your way shortly. I am Frank Omalape, and this is Business Week. Thank you, everyone, for joining us. Let's bring you some stories that made headlines in the week. The Central Bank of Nigeria has again raised the monetary policy rate, which measures interest rate by 50 basis points from 26.25% to 26.75%, amid soaring inflation and skyrocketing food prices. A senior reporter, Ademola Lawrence, has details.
The CBN Governor Olayemi Cardoso announced this after the Apex Bank's 296th Monetary Policy Committee, MPC, in Abuja. The MPC also retained a cash reserve ratio of deposit money banks at 45% and Merchant Bank at 14%, retained the liquidity ratio at 30%. Mr. Cardoso also said the committee was mindful of the effect of rising prices on households and businesses and expressed its resolve to take necessary measures to bring inflation under control.
The prevailing insecurity in food producing areas and high cost of transportation of farm produce are also contributing to this trend. Members were therefore not oblivious to the urgent benefit of addressing these challenges, as it will offer a sustainable solution to the persistent pressure on food prices. Also noted in its consideration,
said despite the June 2024 rise in inflation, prices are expected to stabilize soon as the monetary policy gains further traction, in addition to further measures by the fiscal authority to address food inflation.
The committee noted that the increase in the level of external reserves would further build confidence for a more stable exchange rate and thus urge the bank to explore available avenues to improve inflows, especially through diaspora remittances. Members noted the efforts of the federal government and private sector towards improving domestic refining capacity, as this is expected to reduce foreign exchange currently being expended on the importation of refined petroleum products.
The next MPC is September 23rd and 24th.
And elsewhere in the week, the Corporate Affairs Commission, CAC, has given over 91,000 dormant companies a 90-day grace period to file all their outstanding annual returns or risk being delisted from its register. This was disclosed by the CAC in a statement published on its website on Wednesday, emphasizing that there are over 91,014 companies that will be affected. According to the statement, all dormant companies in the last 10 years are due for delisting in line with the Companies and Allied Matters Act of 2020. The Commission says Section 692 of the Companies and Allied Matters Act 2020 mandate it to strike off the name of a defunct company from the register of companies. The CAC, however, advised affected companies to file their annual returns to avoid being delisted. Also in the week, the Steering Committee of Nigeria's National Single Window Project is rallying stakeholders and agencies to support the federal government's aspirations of having the project operation in Nigeria. Head of the project secretariat, Mr. Tola Fakolade, emphasized this during a council visit to the Nigerian Shippers Council headquarters in Lagos. TVC News senior business correspondent Ifeanyi Eze has more.
Highlighting the project's significance, Mr. Tola Fakolade underscored the Nigerian Shippers Council's crucial role in realizing the national single window. He outlined benefits such as increased government revenue, boosted foreign investment, higher trade volumes, and streamlined automation processes.
In terms of ease of doing business, Nigeria, we want to improve our rating because a part of the reason why the rating is low is because our import and our clearing lead time is still in the double digits from the sea. I think the last data I have is it can still take between 2 to 3 weeks to get containers out of the port. And in countries that have implemented single window many years ago, there are countries that are doing this in 48 hours.
Responding to the committee's visit, Executive Secretary of the Nigerian Shippers Council, Mr. Pius Akuta, affirmed their commitment to backing the project's implementation. He urged all agencies to embrace automation for more efficient operations.
The world is moving towards automation. Autonomous ships are already launched in other parts of the world. People are already building infrastructure underneath the sea to charge and power ships that are moving on their own. And then you look at the advantages of technology also today, like he rightly said. It's going to raise the revenue profile of the country, which is what we are looking at.
Mr. Akuta expressed optimism about the national single window's potential benefits, aligning with the government's efforts to diversify the economy away from oil. He also mentioned the Council's anticipation of his bill to enhance regulatory activities.
As the Nigerian Shippers Council, we are getting set. Once we have our law in place, we want to quickly begin to work together with all the other stakeholders, both public and private stakeholders, to see how we can begin the regulatory regime that will bring about efficiency in the systems.
The National Steering Committee, inaugurated by President Bola Ahmed Tinubu, says it remains dedicated to ensuring the successful establishment of the national single window across Nigeria.
And finally, outside Nigeria, Britain's Vodafone has sold a further 10% stake in Advantage Towers for 1.3 billion euros, which is about 1.4 billion US dollars, bringing its ownership in a group which controls European mobile phone mast down to its intended level with infrastructure investors. The new sale is the final part of a deal announced in 2022 when Vodafone said it would sell a chunk of a Germany-based mast company, the Global Infrastructure Partners, and KKR to raise proceeds to reduce its debt. Vodafone said the 1.3 billion euros from the latest sale took total proceeds from the Vantage Towers sale to 6.6 billion euros. Oak Holdings, the partnership that co-controls Vantage Towers, bought a 10% stake following the deal. Vodafone said Oak Holdings own 89.3% of Vantage Towers, with Vodafone's effective ownership at 44.7%. Those were the biggest stories that made headlines in the week. Coming up after this break, the Central Bank of Nigeria raises the lending rate by 50 basis points to 26.75% amid soaring inflation and food prices. What does this mean for the economy, commercial banks, and businesses? Well, that's our talking point in a moment. Please stay with us. Well, if you just join us, this is Business Week, broadcasting from our studios here in Lagos. Let's get into our conversation for today. The Central Bank of Nigeria raised interest rate by 50 basis points from 26.25% to 26.75% in the week. The governor of the CBN, Mr. Olayemi Kadoso, announced this at the end of the MPC meeting earlier in the week. Speaking on the reason for the 50 basis point hike, Mr. Kadoso noted that recent events in the economy, such as inflation and the need to stabilize FX market, are a reason for the increase. Now, let's make sense of these. I'm joined by partner and head of transfer pricing and economic advisory services at Analysing, Dr. George Banfo. He joins us virtually. Thank you, Dr. Banfo, for joining us. Well, 50 basis point was the hike from 26.25% to 26.75%. Of course, this is the fourth consecutive increase witnessed in 2024. Let me ask you, what does this increase mean for businesses and the broader economy?
Thank you very much, Frank, for having me once again. I think the MPC continuously increasing the monetary policy rate shouldn't come as a surprise to the public at all. I mean, I think the current CBN governor has made it abundantly clear in terms of what his commitments are. And the number one commitment is the core mandate of the Central Bank of Nigeria to achieve price stability. As long as inflation continues to increase, the expectation should be the fact that the CBN as well as the MPC will continuously increase the monetary policy rate in an attempt to combat or rein in the inflation rate that is increasing. So what we saw was that the previous month, I think the inflation rate was about 33.95 thereabout. Now it's moved to around 34.19. So as much as the rate of increase is diminishing, so we had about a 24 basis points increase. Now it's not peaked yet. So the hope is that it has to peak and the increase should start declining in order for the MPC or the CBN to start thinking about holding the monetary policy rate and then over time start decreasing it. So that is supposed to be the trend. Unfortunately, we saw a slight increase from May to June, which meant that there was a high likelihood that the MPC was also going to increase the monetary policy rate in order to increase interest rates across the market, hopefully decrease aggregate demand, and therefore bring some price stability. So that is the reason why we saw an increase of 50 basis points from 26.25 to 26.75 when it comes to monetary policy rate to try to combat the inflation. Now, the question then is, what is the potential unintended consequences of this consistent increase in monetary policy rate? Remember, the obvious intent is to curb, rising prices of goods and services across board. But what are some of the unintended consequences? One of the obvious unintended consequences when you have this tightening monetary policy of consistently increasing monetary policy rate is the fact that the cost of borrowing to businesses also goes up. Because once the monetary policy rate goes up, other interest rates will also go up, which would include prime interest rates to businesses. When the cost of borrowing goes up for businesses, it becomes difficult for businesses to expand their business. It becomes difficult for new businesses that are dependent on debt to fund their business to actually start embarking on those business initiatives. So there's an unintended potential adverse impact on the business sector. And that is of a big concern. We all know that Q1 GDP growth rate data came out and we grew around 2.98 in terms of GDP growth rate. What we want to see is a growth rate that is getting closer to at least 5%. As long as the economy continues to grow around 3%, that means the growth rate is pretty much matching the population growth rate. There's no way you are going to make the average Nigerian's life better if our growth rate is hovering around 3%.
Well, Dr. Banfo, one of the reasons the CBN gave for the increase is inflation, and they need to continue to stabilize the FX market. But how is this continuous upward increase by the CBN How do you think this will further tame inflation, particularly with the current inflation rate reported at 34.19%? What are your expectations for inflation trends in the coming months?
Yeah, I think one of the reasons why I think the Central Bank of Nigeria continues to increase monetary policy rate is for a number of reasons. One, they have a much easier control over that. That is basically the interest rate at which they lend to the commercial banks, so they can easily decide to increase it if they think that that will help, achieve their set goals. So it's much easier for them to continue to do that. And that's the orthodox means that a central bank would use to deal with inflation. That said, I think that that might not in itself be enough. The good news is that now we have some fiscal policy helping the monetary policy to achieve the set goal. So we could see some results where we hit a peak, all right? And that peak itself is still going to be a very high inflation rate because we are already around 34.19%. Inflation rate above 30% is extremely high in itself. So even if it peaks at 35% before it starts coming down, that is still a high inflation rate. So for me, I think there should be some creative means in addition to increasing monetary policy rate in order to achieve the goal of price stability. And what I've always said is that there should be increased focus on exchange rate management. For now, what we see is the CBN more committed to deal with the inflation issue than the exchange rate volatility issue. And the two are clearly interrelated. And I think that the focus should be achieving exchange rate stability, because once you achieve that, you can also achieve price stability in terms of taming inflation. And why am I saying so? There are two key areas that the CBN governor said were the major causes for the continuous increase in inflation. One was food inflation, the fact that insecurities in the areas where agricultural production takes place has hurt, food supply and therefore led to food inflation being very high. Two has been high energy cost, making the transportation of these agricultural products from the farming areas to the commercial areas where they are sold. The combination of these two tends to increase food inflation, and food inflation has been the major reason why the headline inflation has been very high. Third element is the fact that we have middlemen who purchase these food products and sell to neighboring Francophone countries because the CFA is now significantly stronger than the Naira. So what you see here is that two of the major reasons why you have food inflation being high is related to the exchange rate instability. In other words, if the Naira grows stronger or becomes stable against hard currencies like the USD, and therefore gains against the CFA, there will be little incentive for middlemen to be supplying these agricultural products to neighboring countries as opposed to supplying it to the local market. Two, one of the reasons why energy costs has gone up significantly, first of all, in part has to do with the removal of the fuel subsidy. And secondly, is the fact that as long as exchange rate continues to weaken, the cost of importing petroleum products into Nigeria is also going to go up. For the same dollar price, if your exchange rate weakens, that petroleum product price will also go up. So you can see that there's a key role in terms of the weakening of the Naira against the USD that then impacts, food inflation and therefore headline inflation in general. So my view has always been, should the CBN now focus more on the stability of the exchange rate? That in itself would help contribute to the stability of the average goods and price on average goods and services.
Well, I want us to look at the cash reserve ratio for deposit money banks at 45%, while that of merchant banks was put at 14%, and the cash liquidity ratio pegged at 30%. First, help us make sense of this terminology for the man in the street, for understanding of the man in the street and how this is likely to impact banks, lending practices, and of course, secondly, how do you think businesses will respond to the higher cost of borrowing due to the upward trend in the lending rate?
So clearly, there are a number of tools available to the Central Bank of Nigeria to manage the amount of money supply in the system and therefore the aggregate demand for goods and services. One of those tools happens to be the ability to change the monetary policy rate, which is the interest rate at which they basically lend to commercial banks, and therefore impact the amount of money supply that the commercial banks also inject into the economy and therefore aggregate demand. So the monetary policy rate is pretty clear to us. When it comes to the cash reserve required ratio, there's basically some percentage of deposits that banks get from the public that by law, CBN requires them to keep. All right, so if let's say the public makes a deposit of, let's say, $100,000, all right, the banks cannot lend out all the $100,000 because we'll be making claims on our deposits. So it cannot be the case that when they have all $100,000, then they lend out all $100,000. In that case, if you go and you make a demand to take something, some dollars from your account, they wouldn't have anything to give you because they've lent everything out. So the CBN the CBN has a responsibility of setting some percentage of those deposits that needs to be kept and not given out as loans or whatever the banks want to use in terms of their investment decisions. So the higher that percentage or the cash reserve requirement, the lesser the excess reserves that banks have in order to lend to the public, and therefore impacts the amount of money supply in the system and our demand for goods and services, if it's for individuals or even banks in terms of having loans in order to expand their businesses. The good news was that when it comes to the cash reserve required ratio, that one didn't change. They held it put, but the MPR is what kept going up. So by and large, what is happening is that the central bank is implementing what we call tightening monetary policy or a contractionary monetary policy. What they're trying to do is to ensure that we have lesser money in circulation to demand goods and services and then put upward pressure on the price of goods and services. What they want is have lesser money in circulation, we demand less, and therefore we don't put as much pressure on price of goods and services.
There's a lot of conversations around the need to improve coordination between the fiscal and monetary policy to drive the ongoing reform objectives. Would you say there's been a great synergy between the two? And finally, what's your outlook on subsequent MPR decisions?
Clearly, in recent times, you can see some more coordination between the Central Bank of Nigeria and the Ministry of Finance in a more coordinated manner to achieve said goals. So the example I gave in terms of inflation and how to deal with it, I think it's become abundantly clear that the monetary policies cannot on its own fully address the inflation concern. And there'll be a need for fiscal policies to actually complement some of these monetary policies to achieve it. And one of such has been the short-term stopgap, where they're trying to give some duty-free incentives for the importation of some selected agricultural products to make up for the deficit when it comes to supply of such agricultural products in the local market. So that is supposed to help curb the inflation rate going up. So you can see some coordination between fiscal policy and monetary policy. And once again, you realize that the monetary policy owners also talked about the fact that we also need to continuously support the producers of these agricultural products. So Bank of Industry is going to be mandated to continue to supply issue some loans targeted to the agricultural sector so that we have adequate supply of some of these key food products into the market to complement the policies that the fiscal policy side is bringing to fore. So you can see some coordination here, which is good. At the same time, as the Central Bank of Nigeria is fighting inflation, it's also important that the fiscal policy side also continues to look at areas where they can continuously support some businesses to ensure that the economy continues to thrive as we fight inflation. If not, what is going to happen is we can have a situation whereby slowly the economy grinds to a halt whilst we are fighting inflation. And it's only when we deal with inflation that the economy has to then bounce back. So there should be a balance. And I can see some, coordination between fiscal policy and monetary policy, which is a good thing.
Well, I think a good place to leave it. Partner and Head of Transfer Pricing and Economic Advisory Services at Anderson, Dr. Josh Banfo. Thank you for coming on the program.
Thank you very much, Frank, for having me.
You've been watching Business Week, and just before I let you go, let's tell you that the National Bureau of Statistics says prices of beans, tomatoes, Irish potatoes, gari, yam, and other food items witnessed significant price increases in June 2024. The Bureau said this in its selected food prices watch report for June 2024 released in Abuja. The report shows the average price of 1 kilogram of brown beans increased by 252.13% from 601 naira 12 kobo recorded in June 2023 to 2,292 naira in June 2024, while on a month-on-month basis increased by 14.11%. The report also shows that the average price of 1 kilogram of tomatoes increased by 320.67% on a year-on-year basis from 547 naira 28 kobo recorded in June 2023 to 2,302 naira in June 2024. On a straight profile analysis, the report showed that in June 2024, the highest average price of 1 kilogram of brown beans was recorded in Kogi at 3,000, while the lowest was recorded in Adamawa at more than 1,300 naira. Well, and that's our show this week. Thank you, everyone, for sharing your weekend with us. I am Frank Omalape.